Hello and welcome to Crypto Weeklies. In this video, we are going to analyze Hedera and its token HBAR, conduct machine learning based price forecasts, as well as regression analysis and accumulation strategies. None of the content is financial advice. We use statistics, machine learning, and also data analytics to identify some of the undervaluation, overvaluation zones for cryptos. We have recently launched estimated bull targets, which we'll be covering in this video for the upcoming bull run. HBAR is one of the leading cryptos. The reason that we are covering HBAR today is over the last 24 hours, HBAR has been one of the rallying cryptos. You can see a decent gain of about 7.5% in the last 24 hours. Price above 5.5 cent. A market cap above 2 billion, and a steady growth at that. In terms of the tokenomics, about 80% of little over 75% tokens are in circulation. Max supply at 50 billion, circulating supply at around 37 billion. And the reason that we are covering this today is, if we toggle between the price chart and the market cap chart, we will see that they are moving in line. That means from here, if there is any growth in market cap, that should be reflected well in the price of the token, which is a good sign. Most of the newer cryptos have tokenomics which does not favor this inline growth with market cap and price because of newer token unlocks. Now that we have covered this one, HBAR, one of the top cryptos. Again, over here we have all the analysis at cryptoweeklies.com. This is the homepage of the site. Not just HBAR, we have it for most of the top 100 cryptos and some exotic ones on this website. You don't have to sign up or pay. This is information available for free. In terms of the weekly price action that we just saw for HBAR, this price action was trained on the machine learning model using ARIMA, LSTM, and XGBoost techniques. The three scenarios forecasted by this model using this data as training set are as follows. For HBAR, the base case is flat. That means if there isn't any bias to bullish or bearish side, the price at this level does not have a bias to grow or decline. In the bull case, though, the at 1 standard deviation accuracy, the price forecasted by the model is between 6.5 cent all the way to about 14.5 cent. The bear case is between 2.5 cent and for almost 5 cent. In terms of analyzing the overvaluation and undervaluation in terms of tabular or a week by week progression of these forecasts, the tabular format is available on the bottom of the screen. You can read up how this is calculated. And the base case is in the column in middle. To its left are the 3 standard deviation bear cases. To its right are the 3 standard deviation bull cases. The 2 standard deviation bull case, typically exhibited during the mania phase of a market, highlights this 95 percentile or 2 standard deviation forecast for HBAR between now and middle of March of 2025. Price action between 7 cents to about 46.5 cents. So this is again one way to identify, if the market were to go parabolic, how high can HBAR go at 2 standard deviation. That is typically during the mania phases. Now that we are gearing towards a bull run, those 3 columns, basically the base case, the bull case at 68 percentile, and the bull case at 95 percentile confidence, are the key over here. And if there are any pullback, the 68 percentile bear case typically should hold some support. Again, not financial advice. In terms of now HBAR and its regression analysis, the price below the polynomial regression analysis wrapped around the weekly price actions, the fair value in pink. On top of this fair value in pink, there are 3 standard deviation residuals to the upside and 3 standard deviation residuals to the downside. The price is between the 1 standard deviation residual and the 2 standard deviation residual, the green and the light green. If we zoom in over here, the price is close to this between this green and lime green valuation. If the price were to rally anymore, the around 8 cents, that's the 1 standard deviation bottom for HBAR. The fair value per this polynomial regression analysis is around 13.5 cent, and 1 standard deviation ceiling at around 23.5 cent. If we were to check only the 2 standard deviation levels for HBAR, we can get rid of the 3 standard deviation for now. You can see the price stays about 95% or slightly more than 95% of the time within these bounds. The 2 standard deviation ceiling or that overvaluation residual is at around 41 cents, and if you follow that closely with the 2 standard deviation bull case scenario for HBAR, they are essentially between 40 and 45 cents. So that is again one key level to watch if the market were to go back to parabolic phase. The last time HBAR and its previous weekly all-time high, at that point in time the 2 standard deviation ceiling was at around 34 cents. Now at this point it's at around 40 cents, and as the asset matures, the 2 standard deviation ceiling should go up with time if there is continued adoption of HBAR. In terms of the accumulation strategies, the shorter term overvaluation undervaluation model says the risk reward at this point, the reward is at 74, the risk is at around 26. So that means 74% chance of higher returns and 26% chance of a crash. So this is again the shortest term model for accumulation. The DCA model, which takes its methodology from the polynomial regression based valuation, this says that right now accumulating HBAR again normalized between 0 and 1 risk. The risk is essentially between 0 and 0.1, one of the best time to DCA per this model. You can see whenever the color is in this purple territory, that's when the value has that's when the token has been in a value zone. Right now that territory should ideally last till the price goes to about 7.5 cents. This chart gets updated every single day, so you can check it out if you want to check the DCA based risk levels for accumulating HBAR. This chart is flashing a DCA signal. In terms of the last model, which is time weighted average price, which checks operates as a line in sand, below which if the price is trending or the price is between below the time weighted average price and the bottom, that's typically a zero risk or low risk zone where the reward is high and the risk is low. This is a very longer term accumulation strategy based model, wherever the price goes below the time weighted average price, that is when the color goes back to this plum or purple territory. That's when DCAing makes the most sense. Right now the price has been in this zone for a prolonged period of time, and if we were to normalize the accumulation and weight it together and go and check out what could be an estimated bull case scenario for HBAR using these 3 models that we discussed, the regression risk at around less than 0.1, the DCA model, that is the regression risk, the time weighted average price, that the model that we just discussed, essentially zero risk. Whenever the risks are close to zero, the rewards are close to 100%. In terms of SMA risk, again that we discussed, the 26% risk and 74% reward. That's close to, if we weight these 3 risks together, the weighted risk is at around 0.06. That means 94% reward, 6% risk. If we were to use this weighted risk approach, the estimated bull peak for HBAR in the upcoming bull run could be at around 88 cents. And in terms of the return from the latest price, it's around almost at around 16x from the current position. And if you were to compare this with other cryptos, HBAR does stand out as one of the higher high reward cryptos at this point in time, again at second number at around 6 cents, and again bull run peak at around 88 cents. And we do cover other cryptos on the channel as well, and their risk reward journey and bull run peaks. If you are interested in those, please subscribe to the channel and also give this video a like to stay connected with this risk reward and machine learning based approach to analyze what is the benefit or what is the value zone for any crypto. So hope you enjoyed the content and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.